whatever input you want to look at, whether it's copper or silver or any of the other metals that are necessary to achieve these, these government objectives, they're just not realistic because the metal's just not there. The number I watch to see if I'm successful or not is, are we beating the average COMEX for the quarter? So, and I watch those sales. So our gold and silver sales, I met because we report what our average selling price for that quarter was. And I always look at the COMEX and I go, okay, how good was I this quarter? And I usually, I think they beat me maybe only a couple of times. Well, what I see, is in Mexico, we've been in Mexico for 19 years now, and we started hiring young kids out of university. There's a couple of really good mining universities or engineering universities in Mexico that produce a lot of really good talent, and we're hiring entire graduating classes, 20 kids, girls and guys, electrical engineers, chemical engineers, and they're mid-20s, and they're coming into First Majestic with iPads and iPhones, and they're walking around and they're going, all these old farts, like what are you doing? What are you doing it that way for? There's a much better way of doing it. And it's really interesting, and this has been going on for well over a decade, and a good handful of those original hires that we hired still work for the company today and in management positions, and they're in their mid-30s, and they're leaders within our business, and we continually do this because the mining sector, as I said earlier, is just a slow-moving beast. You have a lot of older people like myself that have been in this business for a long time, educated in a certain way, and there's this education gap, particularly in the United States and Canada, where the kids just didn't want to go learn about engineering or mining. They want to become lawyers or doctors or whatever, and so this sector has been under educated, for quite some time. So it's really Latin America that I noticed it's really kind of filling that gap. And even at Jerry Canyon, we have a number of our senior people that were educated in Latin America in engineering, because those talent pools just aren't available in the United States or Canada. I could be hopeful, but I think that investors are so short-sighted, and that they're just all momentum driven. Something's going up, people are going to buy it. Gold's been sideways for good 18 months now, and it's hated because it's not moving. The whole mining sector is down from its highs, and no one wants to invest in the mining sector. But the second that changes, then mining's the best sector to be in, and gold's the best thing to be buying. It's all headline driven, it's all momentum driven. I don't think many investors look at fundamentals really to any great degree. I think they're all just wanting to make money. And I look at what's happening today very similarly to what happened in 2000, when we had the NASDAQ boom, the dot-com boom, Y2K, and then NASDAQ peaks out in March of 2000 at 5,000 points. And over the next 3 years, it drops 80%. And then that lit up the resource sector, and we went into a 10-year bull market in resource stocks. That's kind of what I'm thinking is going to happen. Hopefully I'm right. We'll see. Well, copper and silver, are challenging because I think, whether we've hit peak, I don't know, because, peak to me is always price related, right? Because all of a sudden, if my theory is correct, that we're going to see triple digit silver, which call it what you want, $125 or something like that, which I think is a reasonable number. You're going to have a whole bunch more money coming into the silver sector, and a lot of these low grade mines that we know exist, high up in the Andes, that are going to cost $1 billion to build, but they could get built. And if they do get built and permitted first and then get built, you're talking probably about 10 years to get them into production. Nevertheless, that would add, substantial amount of silver to the market. at $25 silver, there's not sufficient investment going on. And you look what's happening in a lot of the silver-centered countries around the world. They're becoming more anti-mining. You look what's going on in Peru and Mexico. With some recent news, unfortunately, out of Mexico. Argentina, Chile, Bolivia. These countries are moving to the left and moving very much anti-mining. So as a world population who wants to go green, and it's very negative news, because we need this metal to achieve these objectives. And if these mines keep coming offline the way we see them happening, that's a big problem. That's a perfect, you're dead on that, Tom. I was just in a meeting last night, and we're talking about M&A in the gold sector. And, there's still CEOs in the gold sector using $1,200 or $1,300 gold in their analysis of takeover targets. And we haven't seen $1,300 gold for a few years now. So if these executives don't believe that $1,800 gold or $2,000 gold is here to stay for a sustainable amount of time, they're not going to make the investments. And that's one of the reasons why you're not seeing a lot of M&A activity. I blame it on the financial institutions and the hedge funds, because during the last big run, when gold went up to $1,800 and silver got up to $50 back in 2011, there was a lot of big transactions done, and the executive teams of those companies felt they were doing the right thing. They were being pushed by the banks to do it. I remember, being, running CEO for First Majestic for so long. I was getting deals shown to me on a weekly basis. Oh, you should look at this, you should look at that. And all very low grade, high cost, assets, which would take, a sustained long-term high metal price to permit and build, and so on and so forth. And I didn't take the jump and take advantage of any of them, but I know a lot of teams did, and a lot of mining companies did take on some pretty big assets. And then as the market turned, over the next 5 years, they were highly criticized, for doing what the banks were basically telling them they should do. And it was the banks and the institutions who actually funded these acquisitions who came out against the executive teams of the mining companies. So now we're not back into a relatively high-priced metals market, maybe not high price, but better prices anyways. And we're not seeing that activity, because in my view, these management teams are paranoid about running into the same problem they did before.